What is up, everyone, and welcome back to Explain the Charts. Today, on October 9th, 2025, we are taking a deep dive into Bitcoin, which has been making headlines with some absolutely explosive price action. First, we'll cover the massive wave of news driving the market, and then we'll get into the charts to see what the technicals are telling us. The biggest news is, of course, Bitcoin rocketing to a fresh all-time high just a few days ago, topping $126,000. This incredible surge is happening against a backdrop of serious macroeconomic turmoil. The US dollar has seen one of its steepest declines in decades, collapsing over 10% this year, prompting what many are calling a debasement trade. Investors are fleeing the dollar and seeking hard assets like gold and Bitcoin, which is increasingly seen as digital gold. Adding fuel to this fire is the ongoing US government shutdown, which is pushing investors toward Bitcoin as a hedge against traditional market instability. Furthermore, the Federal Reserve is widely expected to cut interest rates again at their meeting on October 29th, which could unleash even more capital into risk assets like Bitcoin. On top of the macro environment, institutional adoption is surging at an unprecedented rate. U.S. spot Bitcoin ETFs saw a staggering $3.2 billion in inflows just last week, marking their second-best week since launch. Firms like Morgan Stanley are now officially recommending crypto exposure to clients, and companies like Square are enabling zero-fee Bitcoin payments, increasing its utility. This confluence of factors has analysts setting incredibly bullish price targets, with many eyeing $140,000 to $150,000 as the next major milestone, possibly even before the end of the year. Now, let's look at how this narrative is reflected in the charts. Looking at the daily chart, we can see this story unfold perfectly. After bottoming out earlier in the year, we saw a steady recovery, but the action at the end of September is where things got truly parabolic. You can see this massive green candle on October 1st, where the price exploded from the $114,000 level, breaking past previous resistance with incredible force. This move from below $110,000 to over $125,000 in about a week is a clear sign of the institutional spot demand we've been reading about in the news. This isn't just retail speculation. The price topped out on October 6th at a new all-time high of just under $126,300. This level is now our key overhead resistance and the number everyone is watching. However, no trend moves in a straight line, and the market was showing signs of being overheated, with reports of massive liquidations as leverage got flushed out. Following the all-time high, we saw a sharp pullback on October 7th, which you can see in this large red candle. Let's switch over to the 1-hour chart to get a closer look at this recent price action. Here you can see the run-up to the peak, the top on October 6th, and then the very sharp sell-off on the 7th. The price fell from above $125,000 all the way down to the $121,000 area before finding buyers. This pullback was predicted by some analysts who saw it as a necessary shakeout of late longs and a healthy consolidation before the next leg up. Notice how the price has been consolidating since that drop, trading in a range roughly between $121,000 and $124,000. The $121,000 level has established itself as a very important short-term support. As long as bulls defend this level, the immediate structure remains constructive for another attempt at the highs. A break below this, however, could signal a deeper correction. The volume during the drop was significant, indicating real selling pressure, but it has since tapered off during this consolidation phase, which is typical. Now, let's zoom in even further to the 15-minute chart to see the micro-level action. This time frame really highlights the volatility around the all-time high. You can see the fight between buyers and sellers playing out candle by candle. After the initial dump, the price has been making a series of lower highs and higher lows, essentially coiling in a tightening range. This suggests the market is building energy for its next significant move. Short-term traders are watching for a definitive break of this consolidation pattern. A break above the $124,000 area on this time frame could signal a retest of the highs is imminent. Conversely, a sustained breakdown below the $121,000 support would open the door for sellers to push the price lower. The battle for control is happening right now in this range. Coming back to the daily chart for the bigger picture, the long-term trend remains undeniably bullish. We are in price discovery mode, which means there is no historical resistance overhead. The recent dip was bought up, forming a bullish-looking candle on October 8th, showing that buyers are still active. So, let's recap the key levels and potential scenarios. Our primary resistance is the all-time high around $126,300. A clean break and hold above this level would signal a continuation of the bull run. Psychological targets would then come into play at $130,000, $140,000, and the much-discussed $150,000 level. On the downside, immediate support is the $120,000 to $121,000 zone. If that fails to hold, the next major support area is between $114,000 and $118,000, which aligns with some analysts' pullback targets. A drop to this level could be seen as a prime buying opportunity by bulls, assuming the broader narrative remains intact. The most critical long-term support is the previous resistance area around $109,000 to $110,000. A drop below this level would seriously damage the bullish market structure. So, what are the probabilities? The bullish scenario: Bitcoin consolidates briefly before breaking the $126,300 all-time high. Given the powerful macro tailwinds and immense institutional inflows, I'd place a 75% probability on this scenario playing out in the short to medium term. This likelihood increases if we see continued strong ETF inflows and further weakness in the dollar. The bearish scenario: the current consolidation resolves to the downside, breaking the $120,000 support. This could lead to a deeper correction toward the $114,000 support zone. I see this as a lower, 25% probability, but it's a real risk, especially if we see a sudden negative catalyst or if the derivatives market flashes more warning signs of being overleveraged. Keep a close eye on the Fed meeting on October 29th, as any surprises there could certainly move the market. Also, continue to monitor ETF flow data, as that has been a primary driver of this entire rally. That's all for today's analysis on Explain the Charts. Remember to like and subscribe for more in-depth chart breakdowns. Please be aware that this is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions. Trade safe, and we'll see you in the next one.